Hey everybody, today's April 23rd, and today we're going to look at the stock market. Now, this week has been very interesting because we had some volatility this week on certain days, but overall, the week is probably going to close green, and today, Friday, is looking very, very bullish. And so today we're going to talk about whether I think the market is going to continue higher, or may we see a possibility of a pullback down to these moving averages. And before we begin, please read the disclaimer, and you can pause this video as you read it. Okay. So this week has been very interesting. We've seen some volatility over the past few days, especially yesterday. Right? This week we basically opened down, but then we recovered, and then yesterday the market plunged all of a sudden in the middle of the day. And the reason why we plunged was that Biden announced his proposal to raise capital gains taxes a little bit higher than most people expected. But the thing is, this is not news, right? Like, we already knew that Biden was going to raise capital gains taxes. We just didn't know when he would announce the details, and it looks like he's going to announce the details soon. And so we'll definitely update you guys and to see how this affects the market going forward when we have more details as to what his actual plan is. But the gist of it is that he's planning to raise capital gains taxes for people making over $1 million in income. So if you make less than $1 million, or I believe it's like less than 400 or 500,000 a year, then your capital gains or your taxes shouldn't change too much. But the idea is that this is really just putting more of a tax burden on the wealthy, right, to fund his projects, because we can't keep printing trillions of dollars. Right? Eventually, we have to find other revenues of income to fund his proposals, or his plans for stimulus and infrastructure going forward. So so that caused the market to come down yesterday. But today we had a really spectacular recovery, right? I mean, we just, from the opening bell, we basically just been green going up, and we basically wiped out yesterday's losses, and we're actually near all-time highs. So it's a very interesting reaction to the market. But of course, at this point, we are a bit away from these moving averages, and I've said in many videos that I like to see the price come down and touch these moving averages every now and then, right? Because in a healthy bull market, it's good to see the market come down every once in a while and test these moving averages, because it really keeps the market in check as it's going up, right? We don't want to see the market just go straight up. We want to see it come down, and we want to see some people taking profits, and we don't want to see any parabolic moves, because that can mean that the market is getting a little ahead of itself, right? When we see these parabolic moves like we did in 2017, we tend to see big crashes or corrections of 10% or more as a result, as the market tries to correct itself back to the norm or to the medium. And sometimes we'll see years of volatility as that happens. I also talked about how we do still have a so two things I want to talk about. First is the gap that I talked about happened last week, and this gap doesn't have to, there's no rule that says it has to fill, but these gaps generally do fill, and sometimes they can take a while to fill, right? We talked about this in a previous video, how this gap took a month to fill, even though this gap took only a couple days to fill, right? So it is possible that this gap could eventually fill in the future, but what I'm looking at right now is this Fibonacci level, right? Right now we're consolidating around this Fibonacci level, and Fibonacci levels tend to act as resistance or support, meaning that the price came up here, but it's not like we had a clean break above, right? We came down, retested a couple times. Obviously, we had some volatility. So a nice trending of this line to try to see if buyers have enough conviction to buy these dips and push the price higher. Because short sellers, they want to come and attack the price on any sort of news they can get. So yesterday, of course, Biden's capital gains tax increase news came out midday. Short sellers were ready to attack and push the price down, right? But today the buyers stepped in and pushed it up higher, and we have a very small higher high. Nothing to write home about, but it is something to think to mention. But the point is, like, I think that if we can hold this Fibonacci level, support level, or resistance level, we can break through, flip this to support, and then push up higher. I don't think we necessarily need to come down and fill this gap anymore, right? These moving averages will continue to move higher, and yeah, eventually in the future we may come down and test it again, and I think that could be a great buying opportunity. But for now, yeah. So right now we're going up even more, and we're very close to all-time highs, right? And so it's gonna be very interesting to see how the market performs going forward. I think if we do hold this level, I expect the market to continue higher. Of course, we're in the middle of earnings season, so that could change things around. If earnings the latter half of the earnings season isn't good, but so far earnings season is good, and I've already said in the past that I expect this earnings season to be really good. So that's just more catalyst, more fuel for the market to go higher, right? Another catalyst or fuel is the dollar coming down. So dollar coming down obviously is going to put less pressure, downward pressure on the stock market like it has in the past couple of months. So in March, dollar came up, and we saw some pressure in the markets coming down, right? Especially in the tech stocks, right? Tech stocks, especially were hit hard by, especially with the rising yields. So we had rising yields all year, and that put a lot of downward pressure on growth stocks, specifically tech stocks. We saw rotation into value stocks. Value stocks did very well, but we saw more volatility in the tech stocks as people rotated from tech stocks to value stocks, or growth stocks to value stocks. But now that the yields are coming down a little bit, right? Coming down a little bit, dollar is coming down a little bit. Now people are they're willing to take more risks, right? They're willing to have more risk on assets, so more risky assets. So that's why we're seeing a rotation into tech stocks more, and that now it's starting to recover and it's very close to reclaiming all-time highs again. And I expect the tech stocks to recover fully and lead the market again very soon, especially with these earnings coming out. And I think people are starting to see that things aren't as bad as perhaps we envisioned. Of course, the economy is recovering more every day. More people are getting vaccinated every day, which is good. And more companies are recovering and getting better, and people are going out and spending more money, velocity money picking up. So I think that I'm optimistic going forward, right? I've said in previous videos that the stock market is in a secular bull market for over a decade, and I expect that this market will continue higher. Now, let's look at possible downside risks. I said that I do like to see the market come down every once in a while, right, to keep the market in check so it's not going up to at an unsustainable rate. So right now we've had 4 weekly green candles, and look at the last time we had that many green candles, right, up here, and we had a massive 10% plus correction that lasted a month, right, 4 red candles. So I would rather see the market come up like this, where we have maybe 1 or 2 green weeks followed by a red week. But the fact that we're sort of going up and we have a gap, right, we talked about that gap, it makes me a little bit worried that this thing might just suddenly break out and then slam down hard, right? So that's not necessarily a bad thing if you're just waiting to buy, like the dip, right? So if this thing does come down and hit these moving averages again, historically, it's been a good time to buy, right? When it does come down and hit these moving averages. But just be careful if you are using leverage or you have a large position, especially going into the weekend. Just think about if the stock market does go parabolic all of a sudden, especially with the VIX really just coming down hard, we could see, and we talked about this in the past, how the VIX likes to hang around and then shoot up every once in a while. Like you get these short spikes in volatility, and that could suddenly put downward pressure out of nowhere, right? And that could really affect your position, especially if you're leveraged. So just keep that in mind. So just to summarize, I am bullish on the market, especially if we hold this Fibonacci level, and we probably will continue higher. Just keep in mind that we do have not only 4 green consecutive weekly candles, but also 3 consecutive monthly green candles. So usually when this happens, don't be surprised if we do see a pullback, a red week, or even a red month. And that's perfectly healthy and normal in a healthy bull market, right? To see some consolidation and a pullback every once in a while and keep the market in check so that it's not going parabolic and rising at an unsustainable rate. And that will keep the market going higher and for a longer period of time than if we just have a blowout top and then like enter a bear market or something like that. So overall, optimistic on the market. I'll definitely update you guys next week as earnings season progresses and comes to a close. So thank you for watching this video. If you found it useful, informative, helpful, please like this video, leave a comment below, and subscribe for updates. Thanks again. I appreciate your support. Have a great weekend.